I'm joined by John Wraith. He's a fixed income strategist at Bank of America Merrill Lynch. John, thank you so much for coming in. Now, in your notes, you basically say, well, we know most of it, but the devil is in the detail. That will give an indication to the markets whether they're cutting too much or in the wrong places. What are you looking out for?
Yeah, I mean, that's right. The Chancellor set out in the budget in June what the overall numbers are. They're not going to be materially different today. So from the market's point of view, that's not really the focus. What is, as you say, the detail of where the cuts are coming, because the market will make assumptions about how likely those cuts are to be able to coexist with growth and indeed to help stimulate growth in the private sector. And on the other hand, the danger is that some of the cuts may be deemed to put the recovery at risk.
But so you're looking for sentiment. I mean, are you concerned that actually a lot of these cuts won't be able to be supported by the private sector because we're still not really in a growing phase?
Yeah, and there's a very difficult balance to strike between the long-term benefits of reducing debt and deficits, which are undoubted and agreed by one and all, and the short-term dangers to confidence and sentiment in what is still a very fragile recovery, very uneven recovery. And the danger is that if the cuts are seen as being too severe, confidence takes such a hit in the short term that growth rolls over. And if that happens, the deficit isn't going to come down in line with the government's forecasts.
Will that have an impact on what the Bank of England has to do with quantitative easing?
Yeah, I mean, we'll see in the minutes today whether there's been a change in the bias of the committee. I suspect, listening to what some of the members have said, they are leaning more towards doing QE. We still think it's some way off. Inflation's still too high. The data's still mixed. Some of it's actually in reasonably healthy territory. So it would be, I think, a tough decision for them to make in November. Clearly, the details of what we hear from the Chancellor today will have an impact on the bank's thinking with monetary policy. But for us, the question of QE is more one for the beginning of next year rather than this year.
John, are you concerned that we're seeing this three-way split in the Bank of England, MPC? Some say, well, it's good to hear all the voices, but actually if there's a three-way split, it means that really they could go, either way.
Yeah, I mean, I think it's a healthy sign that there is a committee with 9 independent voices on it. And therefore, if two members do feel so different, then they should have the right to say so. Where it's a concern, of course, is that the fact they feel so different tells you how uncertain the environment is, and that for one member, as we know, where inflation is, where it's going in certain commodities, not least food and so on, is enough of a concern based on their remit to get them tightening policy. But on the other side, we do have at least one member already who is now saying that's not the way to go, we should be printing more money. So the short-term outlook for inflation is that it's above target and sticky, but where it's going to be in the next few years, I think, is unfortunately anyone's guess.
John, thank you so much. Great to have you in the studio. John Wraith there.